Welcome back to another MiningStockEducation.com episode. I'm Bill Powers, your host. Joining me today is Nick, the Mining Book Guy, as he's known on Twitter, YouTube, and the mining stock chat forum CEO.ca. Nick's gained an online following through sharing his insights regarding companies he's invested in, books he's read on investing, and through his passionate engagement regarding all things mining stocks on CEO.ca. Nick is a retail mining stock investor who truly models the passion and due diligence necessary to be successful in mining stock investing, and Nick's passions and insights regarding mining stocks was recently recognized when he was invited to the prestigious invitation-only Beaver Creek Metals Summit in Colorado this past week. Nick's here with us today to share his thoughts regarding this conference he attended, as well as discuss his approach to mining stock investing. Nick, thanks for joining me today.
Wow. Well, thanks for having me, Bill, and I appreciate that introduction. That probably was one of the nicest introductions I've ever had, so I'm really happy you invited me on here.
Yeah, well, I appreciate you're here, and I always like to start with the question of how you got into mining stock investing, because I find that intriguing, not that just people have achieved a certain level of proficiency in mining stock investing, but I'm always curious as to how one found this little niche segment of investing. So my first question for you is, how did you come into mining stock investing, and why did you choose the username handle Mining Book Guy?
Ooh, nice two-part question. So I'll try to keep it relatively short because there's a few different parts about getting into mining stocks. But I would say, going back 10 to 15 years, when I was in college and trying to get interested in business, I kind of fell into the role of being a president of a finance club at my college. And I felt I wasn't really prepared. And I just started reading all these books, investing type books. It just kind of happened. And I think I really just started enjoying reading and self-education at that point. And I definitely learned more from reading those books than from the classes I was taking at the time. That led me to, open my own, small brokerage account. And I was fooling around with stocks we're saying a couple years before the crash. So things still looked pretty good. And, long story short on the stocks, I had one really big winner early on. It was actually Nintendo at the time when it was a pink sheet listed in Japan. I think it went up like 4 or 5 times within a year and a half. Kind of sounds like a mining stock there. So that was I kind of got that rush from getting those multi-baggers. Unfortunately, I put all that money into another company called Uwink, which was a true penny stock in the kind of the tech space, and lost pretty much everything. I didn't really know what I was doing clearly, but that was a great lesson in itself. Kind of led into the financial crisis, and luckily for me, I had a few different irons in the fire. I liked investing or speculating in stocks, but I also was trying to start some businesses. And I started a Facebook game business with a friend from high school. He was the brilliant programmer, and I was more the business guy. But amazingly, that worked out really, really well for the next few years. And so we're getting up to like 2011, 2012. And near the tail end of that, I started to get interested in precious metals. And I felt like I wanted to know more about the macro situation in the world. And I was also kind of like, that business was doing well, but I kind of wanted to move on to something else. And so within a year period, 2011, 2012, I started, specifically getting into like physical gold and silver. I sold the shares of my company. So I got out of that. And then I kind of slowly got into mining stocks, but only the larger producers at that time. And I think this is very important that I had no idea the juniors even really existed. And so between roughly 2012, 2014, that's where we went from, I thought there were only big producers and seniors, and they were listed on the U.S. exchanges. And then I discovered, oh, wow, there's thousands of these little juniors listed in Canada, listed in Australia, listed in London and the U.K. And then I got really, really excited. And I was very lucky that I didn't really get into those until 2014 or so, there was still a ways to go towards the bottom. But I missed kind of that really horrible time, I think. Kind of 2013, I think, was pretty much the worst year. So I was very thankful for that, but that's kind of my oddball way of going through. I know everybody's got kind of their own fun stories, but ever since then, I've been fully devoted to this. I was thinking about, starting another business, but I treat, speculating on these mining stocks as a business. And I guess as a tail end to that question, the Mining Book Guy name, It's pretty simple, and I appreciate you asking that because I think you're the first person who specifically asked. Part of it was branding for something that would be pretty simple for people to remember and unique. But believe it or not, I actually thought about putting guru into the name at one point, and I'm really glad I didn't. I think I was having delusions of grandeur. I think I probably would have been really made fun of, or I would have regretted that. And I kind of like throwing in the guy in there just because it's casual, and I like being casual with people. And it's one of those things where I didn't put too much thought into it. But I'm glad that people, at least the retail crowd, is starting to recognize me for it. So it's just kind of a casual name that represents that, I read a lot of books. I love sharing book ideas, but it's all related to mining stock.
Nick, in 2015, when you were more focused on mining stocks, did you get into the juniors just because of the value proposition that they offered the investor? Because I know that when I first looked at them in 2015, I invested in some that were down 95% from their 2012 highs.
Oh, good question. And sorry, I might have been hard to hear me on the dates. 2012 to 2013 was when I was more in those larger companies, and so by 2014 even, I did notice a lot of those juniors, down 95%, 97 or 98% for a few of them that I can remember, and that is exactly right. It just felt like some of these companies were left for dead, but they weren't really dead. And that was what was nice, was once I realized, well, if a company has a lot of cash and it has an asset, and sometimes you could actually find them selling for cash, they're not going to need to raise any more money. That was really, really exciting for those micro juniors, for the 5 million, 10 million market caps rather than the hundreds of millions. So in terms of, getting really excited about that, that's absolutely correct. And I'd say 2014, 2015 was when I got really, really serious about that.
Recently, you attended the Beaver Creek Precious Metals Summit, and I saw you posted on your Twitter account that you had gone, and I was really happy for you because I knew that David Erfleet told me that was his favorite conference to attend, and I knew it was an invitation only. So I was really happy for you that you were able to attend that. And so I've asked you to come on. Could you share with listeners how you got invited? What were some of the key takeaways from that conference, and any new companies that caught your attention that you'd like to share with listeners?
Oh, great question. So I guess I'll start it off. I'm glad you mentioned David because but prior to the conference, I only had some emails back and forth with David, but I think you have some of the best interviews of him on your channel. So that was one of the ways I got exposed to what he's doing. And I'm very thankful that he and Jordan Roy Byrne from the Daily Gold, who happen to know each other, they both recommended me for the Beaver Creek Precious Metals Summit. So I was very thankful for that because I had told both of them I hadn't been to a conference before, and they said this was a great one to start with. I couldn't agree more after having attended. So those guys got me in, and once I was there, I have to say what they advertise is, it exceeded expectations for me on all levels. The one-on-ones were fantastic. So each one-on-one, you schedule those in advance. They're roughly 25 minutes, but they could go longer, or you could see the management of these companies later on. But I had over 20 of them, and every single one was quality. All the companies were quality. I didn't know all the companies before I attended, but I definitely learned things that I don't learn from talking to these companies over the phone. And I guess I'm a little different from some other people because I haven't been to these conferences. I still really appreciate phone calls, but you do get a very different aspect of companies when you meet people in person. Everybody has a different way of kind of, pitching their stories and the types of things they talk about. So the fact that the one-on-ones were so great, that there's just a really high quality list of juniors. I believe there was about 150, and they're on average, the quality I believe is much higher than the mega conferences, like maybe the big Cambridge House one or PDAC, which I'm sure I'll attend, but I feel like this is a good kind of middle ground for that. And also one other big positive worth mentioning is that you really do run into all sorts of neat people wherever you go, because the whole conference is up on a mountain, like the Beaver Creek Mountain.
You're secluded.
Exactly, you're secluded. And the funniest thing to me is that it's very hard to get the hotel up there. I think there's a pretty expensive Hyatt, and a lot of the companies get it. So a lot of people stay at the bottom of the mountain, and every day I take a shuttle up. and each time I'm at the shuttle, I meet interesting people. Like really, some of the more interesting people I met was just waiting for a shuttle to go up the mountain. So it starts, bright and early in the morning. You're meeting people, and then you've got lunch, cocktail hours. For people like me, it's awesome because even though it's kind of expensive to stay in the hotels, all the food is free. Like once you're there, like every like they just throw food at you, and everything's very well organized. And yeah, during the cocktail hours in the evening, I met interesting people all the way. So I can't emphasize enough, like this, if it's not the best junior focused conference, it has to be really close to the top. And it's very global. There's a lot of people from the UK, a lot of people from Australia, from Europe, all over the place, and companies on all the exchanges. And I guess to kind of finish off the answer in terms of some companies that caught my attention, I'll mention a few that I don't actually own, but where the one-on-ones really helped, and they're probably not that much awareness around any of them. The first one is Caliber Mining, which is a junior explorer in Nicaragua. And I had known this one, but it doesn't get talked about that much in retail circles. And I just want to emphasize that I really like that they have a combination of good, JVs, good partners that are big names, and 100% owned properties. So there's a lot of catalysts. And the meeting I had with that management team, I'd say was one of the better ones, even though all of them were good. So my only knock on it is it's not cheap enough for me. So that's why I'm mentioning it. If it was cheap enough, I wouldn't be telling you guys. I would. But that's the thing, is I love hearing about these things, and I'll be this one's will be closer on my radar because I saw it at the conference, and that's CXB on the TSXV. Another one was Bedell Resources, which I know very few people are aware of in North American circles. That's BDR on the ASX. And because an interesting side note, one of the main reasons I met with them is that Simon Jackson, who runs it, he was the former CEO of Orca Gold, which has a really interesting project in Sudan, and he's a director in Sarama. And I've made videos on both of those, and I've owned shares and done well with them. And so I went to see this company because he was involved with it, and I just thought it was kind of neat that they're doing some interesting stuff in Brazil that's kind of under the radar, even though it's a combination of a turnaround production and exploration play. And down the road, they could get a dual listing in Canada, and they could become a mid-tier. Like, it was really interesting to hear about their longer-term strategy of maybe getting another asset. So there's all that information that I could pick up in 25 minutes, and it's not as easy to get all of that over the phone, and that was very valuable. This is one I'll definitely be following, and I'm sure a lot of other people, listeners here, will pay more attention if it gets to the dual listing. And then a third one is Avasoro Resources, which is also kind of obscure, but this one is dual listed in the UK and in Canada. But the UK listing is the main listing, and so it's kind of illiquid in Canada, but I think that could change. So it's one that, probably your typical listener could trade, but they might not follow it. And what was really intriguing here was that it's in West Africa, and I didn't know they had aggressive aspirations to become an emerging mid-tier, because they have production in Liberia, but long story short, there's a private holding company owned by a Turkish billionaire, kind of an exciting, crazy story, but they're going to transform the company to combine a public asset with private assets. And this thing could go from, a 100,000 ounce producer to like a 500,000 ounce producer in the next few years. And that was really valuable to get that information there, because there's not that much about these guys online either. So those, I think all three of these are kind of longer term things that are really on my radar now. They're not things I'm buying this instant, but that's the type of stuff I think you can discover at places like Beaver Creek, and it otherwise would be pretty hard to get this information. And as a side note, I did make a thank you video on my YouTube channel, which will be up there, but it probably won't be the main video once some people listen to this conversation a few months from now. But if you find that video, there's a link where I share some other stuff on CEO.ca. So there are some other companies I mentioned, but I just wanted to mention that there was a lot of info that I picked up, and I tried my best to share it on CEO.ca for people who really want to dig into that.
Nick, on CEO.ca and your Twitter accounts, one of the things that if somebody reads what you post that you like investing in lesser known jurisdictions, or some jurisdictions that some people might consider a little more exotic or riskier. Can you share with the listeners why you like to focus on jurisdictions where maybe others don't have their eyes in that location?
Oh, Bill, I'm glad you honed in on that point, because I think this is what I like to think separates what I do from even a lot of professionals or people that I hear about, because I guess there's two sides to it. I have a specific and a more general. On a specific point, going back a couple years, it's amazing to me looking back how I couldn't find anyone excited about West Africa as a specific region when I would go on to CEO.ca or even a lot of other sites or talk to people. And, even to this day, it's not considered the most exciting place, but a lot of people have paid attention to the M&A that's gone on there, to a lot of the discoveries. And so I've already made a lot of money by honing in on West Africa early on and picking up on those jurisdictions that seem to have a positive momentum. And that leads to the more general point. I just don't feel there are many, if any, real experts in geopolitics. It sounds like geology, but if you're getting geopolitical advice from a geologist, that geologist probably doesn't know much more than I do. And now it's true that some people really have been on the ground and they get a good feel for it, but anybody can follow that news online and can pick things up. And to be honest, I feel that I can get an edge that way and try to figure out where those emerging jurisdictions are. So I like using West Africa as an example that absolutely has worked for me as a region over the last couple years. But I'm picking up, regions left and right. There's probably 3 or 4 around the world that I'm really honed in on, and that's often been a great way for me to hone in on the region and then start picking up those jurisdictions that I think are standing out within the region. And you can find some real diamonds in the rough, for a lack of better terms, for some of the juniors that are overlooked. And then if you're lucky, the momentum starts to turn, and you can really make a lot of money when there's a combination of a discovery and positive momentum in a jurisdiction.
Nick, could you offer your profile of the top 5 characteristics or qualities of your ideal junior mining company?
That's a good segue, because some of the things I just described will fit in. But I'd say the number one is really simple. Tiny market cap is huge, and we could say fully diluted market cap or enterprise value, but really just knowing that it's small, that always gets me excited. And definitely under 20 million Canadian or Australian dollars, but why not under 10 million? So I always love looking at something small. Being underfollowed is huge, and just the fact that it's small often is related to it being underfollowed. But an important side point there is it could either be people just don't know about it at all, or it's been a forgotten company. And sometimes the best companies are ones that were really exciting a year or two ago, but they just fell off the charts. And like we talked about earlier, maybe it's down 90% or 95% and no one's paying attention anymore. And so I love that aspect. Emerging jurisdiction, as I just mentioned, that to me, that's really key. I am very open to Canada or the US, but the best opportunities I find are in some emerging jurisdiction somewhere that a lot of other people say is super high risk, but I'm hoping there's a turnaround coming. Multiple catalysts, I think, is really important for those small juniors. Even though I'm very open to one project, I love it when there's 3, 4, or even a few more than that, where there's all these different drill programs going. And to be clear, I'm open to prospect generators, but I personally prefer when you have a combination of 100% owned properties and JV'd properties. I just think it's more interesting and that more people are open to them. But that's just a personal quirk. And I'd say if there was a last one, and maybe this is a little more than 5, but I just want to. I think this is an important point. I'm not tied to a great share structure, and I'm also not even necessarily tied to like great management. But as long as a company doesn't need to raise money in the short term, but they've got really big drilling potential, and we're talking like tier 1 potential, that's a really key thing for me. Unlike a lot of other people, I'm okay with management that's not super well known, or there might be some flaws, as long as there's that big potential. And so when all this stuff put together, it's not like every junior I invest in has these qualities, but those are kind of the best qualities for that really big near-term potential, and that's what I really hone in on right now.
Nick, when I was at PDAC in March this year in Toronto, I interviewed and went to all the booths for the uranium explorers and learned and got information. And speaking to some of them, they only own 20% of the property they were drilling in. And like you mentioned, I wasn't even interested in investing there. If I'm going to invest in an explorer, I'd rather see you funded, and I'd rather see you own the project outright, so that if you do strike something, I'm going to get 30, 40 fold on my return versus maybe time and a half, two, three, fold my return. If I'm going for an explorer, I want to go big.
Yeah, I think that's a great point. I always have exceptions to the rule. I would say that one thing where I'm more okay with minority ownership is if it's in a region where the company really wants to spread out, not just spread out the risk, but wants that first mover advantage of getting as much of the properties as they can. So sometimes you can have a junior that has all these minority ownerships, and they're able to pick up because they're the first mover. That helps them pick up more land. But I'm in total agreement with you, Bill. If you get 80%, if not 100%, like a majority ownership, and they get those results, I get really excited about that. And I love it when juniors are willing to to put their money where their mouth is for those really high potential opportunities.
Percentage-wise, like when you look at your brokerage account, your mining stock segment of your brokerage account, how would it break down between junior explorers, and then producers and majors?
That's a good question too, because I don't think about it that often. I actually don't do a great job of really keeping track month by month of all those specific changes, but my account really has evolved over time. And if I was going to give some estimates, I would say that those producers, or even a few royalty plays, like that's become a definite minority of my portfolio. And we'll talk just in the mining side, 10% of the mining stocks. I would say that developers have become much smaller and also are closer to 10 or 20%. But with that said, a big portion are companies that seem to have a combination of advanced projects and exploration potential. So that's a little harder for me to qualify, because those could be larger companies that are 100 million market cap, and some people would call it developer, some would be explorer. So those make up a pretty good amount. I would say closer to like 40% or so. But then up to half of my portfolio has become those small explorers where there's no if and buts. Like, they are definitely small explorers. And I probably have started trading more than I should and more than I did a few years ago. But I do, follow these on a day-to-day basis, and I can, confidently say, like, those small explorers are kind of half my portfolio, and then the bigger companies, it's kind of mixed between that other half.
The explorers you invest in, when they rise in share price, and I'm going to ask a general question. I know you have to analyze it for each specific company at a specific point in time, but generally speaking, there's different philosophies out there. If it doubles, sell half. If it doubles, sell some. Do you have a general philosophy or guidelines that you employ, because half of your portfolio, mining stock portfolio, is in explorers?
Oh yeah, it's a great point. I would say that some people put down the stock a double, sell half, and they say, oh, you should let your winners run. I think that's a great newbie tip. I think a lot more people should get in the habit of selling too soon. And so I've actually started to do that more when I didn't do it as much in the past. But I do play around with those numbers a little bit. And so I'll say for a lot of the smaller explorers, because I know they're so volatile and things can change, whether it's the fundamentals or the macro. My preference is when it's closer to like a triple, sell third, and I've had success with a couple explorers recently doing that. So like sell third on a triple, and then sell a little more as it goes up. but I do not have hard rules. There are definitely larger stocks where I'll start selling, a little bit off the top when it's up, 50% or so, or, so much less. But for the smaller explorers, I'm generally definitely looking for at least a double. I'd say a triple is closer to a sweet spot for starting to sell. But I've got all sorts of, exceptions to the rule in that as well. So I just wanted to bring up the double, sell half on a double, I think is a very good standard rule, but I think it is also a good idea to play around with that.
Nick, in my experience, just in this last year from posting videos and interviews on mining stock investing, one of the feedback that I've gotten of people that are what they're interested in some of the basics of mining stock investing, because you really do, if you're not familiar with geology and you've never heard of this sector, the learning curve is quite steep to be able to do this effectively. So just understanding the difference between a resource and a reserve, things like this, I've gotten a lot of positive feedback that people just want to be, introduced and get their feet wet and take me, a couple steps into this so that I can begin to learn. With that in mind, for someone just beginning in mining stock investing, what 3 action steps and/or resources or books would you recommend for a newbie?
Ooh, so yeah, it's a great question, and it's really tough to come up with just 3. I do have 3, but I'll add in a 4th one real quick afterwards.
You can make it 5.
Okay. So number 1 absolutely is CEO.ca, which we've already started talking about, and just lurking there, not even contributing, you will start to absorb information. I do think it's a little hard these days to separate, the real geologists or, actual professionals from people like myself, who's a speculator, and I can honestly say I'm trying to help people, versus people who are just trying to pump and dump their stocks. But you just start to absorb and get an idea of what that community is like, and there are lots of friendly people there that will share resources with you, and you can just start following stocks. CEO.ca is number 1, bar none. People should just start checking it out and consider contributing, even if you don't know anything about mining stocks. Number 2, I'd say as a book, I've honed in on this over time because I didn't used to, always recommend it first. But these days, I always recommend The Big Score first by Jackie McNish. I think it's just a phenomenal book because I learned so much more reading it the second time, and I had more fun reading it the second time. And that's usually how a book is a true classic. And so I could see myself reading that for a third time, maybe a year or 2 down the road, and I'll get even more out of it. But that's an adventure book. It has actual great technical knowledge, some geology type stuff. It's got some good wheeling and dealing and M&A. It's got all the good and the bad of the junior world. But when it's all said and done, that's a true discovery where people became millionaires. And a lot of people, did it, even though there are some unethical people involved, and that just happens in this industry. It was actually real value creation. And everything I do is trying to, mimic that, or, try to find the next big score. So I just love that single book. If you read that book and you enjoy it, you'll know that this industry is something you should look into further. As a number 3 thing, this is kind of an interesting point because it's a little further down the road, but I really need to emphasize it. Calling junior CEOs, even if you don't know what you're doing, even if you're new, I think people should get in the habit of that. And so after you read a few books and you check out CEO.ca, I just feel that's an important point to bring out because people can do that without going to mining conferences, and that's how I did it. And a lot of people would probably disagree with me on that, but I don't think you need to go to a conference, and you can start calling these guys and often talk to management directly from when you're just sitting at home and you don't have anything else going on. It's just amazing that you're able to do that with Skype or over the phone. So I really wanted to emphasize that point. And actually, I guess I'll just leave it at 4. But the 4th one I think is a great free resource. And full disclosure, Sprott Global is my broker. So 2 points I guess this makes sense. My broker is a full service broker, and I'm not here to advertise them to everyone, but that's been essential for me, is that, that Sprott Global as a specific brokerage has, real geologists in the house. A lot of the brokers have a geology background. And so even though I haven't read, that many technical books, a lot of my basic technical knowledge just comes from calling them all the time. So that's huge in itself. But the fifth point is related to that. Without ever signing up for Sprott, you can go to the Sprott University website, and I'm sure you can place a link if you haven't already done so on a previous video. It's a really good link because Andrew Jackson, one of their lead geologists, he goes through all the different deposits and a little bit on resources and reserves. And I admit it's a little boring. Like this kind of makes you sleepy. But I was just sitting through one last night to learn more about porphyries, and it's really good stuff. And so that's just some of the videos. There's other stuff on there, but I think that was really worth throwing in here. And like I said, a full service brokerage has been great for me. Not everyone needs that, but you can go to that Sprott University page, which not everyone is aware of. And I think the information there is as good as any technical book, at least as a starting point. So it was a little bit long-winded, but there's my 5 things to look into.
Very good advice, Nick. And I've actually gone through thoroughly that Sprott University page that you're mentioning with the geologists. And then it has the interviews with Rick Rule, Adrian Day from back in the 90s, with the Colorado School of Mines. And, when you mention number 3, calling junior CEOs, that can be kind of intimidating, especially for a newbie. And in Rick's lecture that's posted on this page that you're referring to, one of the things he said is don't waste their time. Do your prep work and your due diligence before you call them. But if you listen to this video with Rick Rule being interviewed by the president of the Colorado School of Mines back in 1995 or thereabouts, Rick gives you 9 or 10 questions that you can specifically ask the CEO in that video.
Excellent point, Bill. Actually, I'm so glad you even mentioned Rick Rule's questions, because again, you don't have to be a client of Sprott to pick up that information. It's all there. And I know those videos used to cost not just hundreds, I think they might have cost thousands of dollars. Like they had courses and all this stuff. So all that information is free, and you're absolutely right. It can be intimidating, but once you just get a feel for the right types of questions, it's really worth it to at least test it out. Or I think everyone should. I know not enough people do it. And that's a great place to do your research before you start calling the CEO. So I'm really glad you brought that up.
Well, Nick, before you go, could you please share with listeners how they can find you on the web and follow your work?
Yes. So I know you mentioned some things prior to the video, but I'm starting to tell people this. Just search for Mining Book Guy, whether it's one word or multiple words on Google. And I think I just show up on the first page, all over the place, no matter what. So you'll get in, if you ever forget where to go, just type Mining Book Guy somewhere. That works great. But the YouTube channel, CEO.ca, and Twitter, as you mentioned, Mining Book Guy shows up on all 3 of those. The YouTube channel is my main thing, but I do post on CEO.ca and Twitter as well. So that should be enough for anyone of the listeners to find me.
Nick, thanks for joining me to share your insights.
Oh, thanks so much for having me, Bill.
Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.